Today the market got the rally it had been waiting for, but not from the place everyone was watching. After 3 straight losing sessions driven by rates, Wall Street finally got its relief. And the relief came from the same place the pain did. Yields backed off. Oil dropped for a second straight day. The Strait of Hormuz reopened to tanker traffic on word that an Iran deal may be near. The fear premium that powered Monday and Tuesday's selling came out of the trade. And stocks ripped. The S&P 500 added 79 points, climbing 1.08% to close at 7,433, snapping its 3-day losing streak. The Nasdaq Composite did even better, gaining 399 points, up 1.54% to 26,270. And the Dow advanced more than 1%, closing back near 50,000. The breadth was wide. Goldman Sachs led with a gain of nearly 6%. Boeing rose more than 3%. And on cheaper oil, the airlines absolutely ripped. United up more than 10%, Delta up over 9%, Southwest more than 6%. In the middle of the session, the Federal Reserve released the minutes from Jerome Powell's final FOMC meeting. The headline number, 4 dissents. That is the most dissents on a single FOMC vote since October of 1992. And the tone was hawkish. Committee members openly worried that the oil shock was driving up near-term inflation expectations. In a normal market, hawkish minutes plus a record dissent count would have pressured stocks. Today, the market shrugged. And that on its own is worth noticing. It suggests equities are increasingly treating hawkish news as already priced in. Then, after the closing bell, the moment of the week. Nvidia reported. And it delivered exactly the print the market had set as the bar. Revenue of $81.6 billion, beating the $79 billion expected. Earnings of $1.87 per share, ahead of consensus. Q2 revenue guidance of $89 to $93 billion, above the $87 billion Wall Street was looking for. A boost to the quarterly dividend. A clean beat and raise across every line that matters. And the initial reaction was a yawn. After dropping more than 2% on the print, Nvidia shares pared the losses to trade roughly flat in extended hours. Now, extended hours trading is thin and noisy. The real verdict comes Thursday morning at the open, when institutional volume returns. But the early read is at least notable for what it isn't, a clear, decisive rally on a clean beat and raise. The print met the consensus bar, but barely. Whisper numbers had been higher. The company declined to forecast China sales at all. And the stock had already run up sharply into the report. So even a beat and raise wasn't the blowout some bulls had positioned for, and the after-hours tape said so. Here's what this week locked in. 2 days ago, this market was selling because rates were rising. Today, it bought because rates were falling. The same lever moved both directions. 3 sessions, 3 reactions, 1 cause. And on Wednesday, the day that was supposed to be Nvidia's, the rally happened before Nvidia even reported, driven by oil and yields and Iran easing. The thing leading the tape right now isn't earnings. It isn't the AI trade. It's the bond market. Whatever Nvidia does Thursday morning at the open, it does against that backdrop. Thursday brings the real tests. Nvidia trades on full volume at the open. That's the actual verdict on whether the AI trade still pulls this market the way it did a quarter ago. And Walmart reports before the bell, giving the first concrete retail read of the week on whether higher energy costs are starting to reach the American consumer. This week, the warning signals stopped being predictions and became a confirmed regime. Thursday tells us whether the AI trade still has its own voice inside it. We cover the markets on the days that actually move, with explainers when it helps. Hit subscribe so you don't miss it. We'll see you next time.